Hi there, good morning. It's a Monday morning. You're watching Market Cafe on ET Now with me, Sneha. With me is Vinny Motiwala. Now, very quickly, this is a show where we're going to take you through everything that has been happening in India as well as globally over the course of the week. We'll also get stock specific in the second half of the show, tell you which stocks to watch out for in today's trade. But while we're talking about global handover, Vinny, lots of pressure being seen on the geopolitical front, very weak handovers coming in, lots of stress is what is being seen built up on the markets as well. Vinny, take us through everything.
Absolutely, a lot of stress. So when you look at it overall, also for Dow Jones, S&P 500 or even the Nasdaq, so overall the Wall Street, that clearly started August on a rocky road, continued on Friday as well, where we saw the decline coming in for the second consecutive day for the Dow Jones, S&P 500 as well as the Nasdaq. Now, when you're looking at it, Dow Jones was down, sharply in trade as well, more than 1% decline that we've seen for all the major indices on the Wall Street, and mainly the jitters came in, and the economic jitters were persisting because of the jobs data that came in the US markets, and that is something that caused other countries and other markets also to fall. Whether you look at a European market, Asian markets this morning, all of them clearly saw those jitters coming in. So slowdown fears are something that is battering the Wall Street, and the losses on the Wall Street mainly even came into the other markets. Now, non-farm payroll data also was something that was missing the expectations. Tech stocks also saw a fall. So whether you look at an Intel, just on Friday's trading session, it was down 28%. The day before that also, after its numbers, it was also down. Apple was also not something exciting that one was watching out for. Tech stocks also clearly under pressure, and overall when you're looking at the Nasdaq also, it was down more than 10% from its record high levels which it hit earlier as well. Looking at S&P 500 also, that was also down more than 1.8% almost in trade as well. So keeping an eye out on the US markets for sure, because nothing exciting happening in terms of the data point that has come in. Economic tensions in the Middle East, that also are continuing. So yes, that's a concern that everyone is watching out for, where that is headed, and that will surely impact the markets as well as in terms of the commodities. Let's pull up the European markets as well. So DAX, FTSE and SEC, all of them also closed on the lower end when you're looking at it in terms of the markets overall on Friday. So yes, looking at the European markets, DAX was down almost 2.3%, 1.3% for FTSE, CAC also a bit muted in trade overall after the US reports. Asian markets this morning, we're seeing a sharp fall. Nikkei has opened up first, down 7% in trade, while obviously it's hovering near that bearish territory is what the highlight is coming in. So keep an eye out on that. Kospi also down 5%, and this is after the fall that they already saw on Friday as well of around 4 or 5%. So surely pressure building in even on the Asian markets as of now. Snehi, nothing exciting. GIFT Nifty also something that is, battered in trade as of now and indicating a fall coming in, continued fall coming in for the Indian markets after Friday as well.
Absolutely. So, well, Vinny, we're bracing for a very pressured day coming in for the markets. With that, let me also take you through what the commodities are up to today. And first of all, let's start by looking at what gold is up to. What oil is up to. We'll also be talking about gold, cryptocurrency, bonds. In fact, before we go ahead, let me just quickly mark what the US 10-year bond yield is doing, and not looking very good. In fact, the 10-year treasury yield is at its lowest since December, tempered by that weekly jobs report coming in. That was very weak coming in this time around. US 10-year is at 3.76, a very sharp fall coming in from that 4 level that it was persistent at just a couple of days ago. And well, see now what's happening. 3.762 is where the 10-year bond yield is. Very quickly, let's shift focus, talk about what oil and crude are up to. US crude oil fell nearly 3% on Friday after a weak jobs report raised renewed fears that a recession could be on the horizon. As of now, WTI at 73.5, Brent at 76.9, close to that $77 per barrel mark. Economic data from the top oil importer China, and a survey showing weaker manufacturing activity across Asia, Europe, United States. They've raised the risk of a sluggish global economic expansion that could weigh on oil consumption. Now, also keep in mind falling manufacturing activity in China. This has also inhibited energy prices. They're adding to concerns about the future demand after June data showed imports and refinery activity in China lower than a year earlier. Asia's crude oil imports in July also fell to their lowest in 2 years, sapped by weak demand in China and India. This is what data has been showing. Meanwhile, on the flip side, you have OPEC Plus that now comes into play. There's a meeting on Thursday. There was a meeting last Thursday that kept the group's oil output policy unchanged, including a plan to start unwinding one layer of production cuts from October. You have so much geopolitical pressure being in. The Red Sea issues with the trade of oil and the transfer of oil are still persistent with the Houthi militants over there. They've been shooting down US drones over the weekend as well. And then you have OPEC Plus also coming into play, adding some more pressure coming in on oil. Oil investors are also monitoring developments in the Middle East, where the killing of senior leaders of Iran-aligned militant group Hamas and Hezbollah stoked fears that the region could be on the brink of an all-out war, threatening to disrupt supplies. Iran-backed Hezbollah and Lebanon has said that the conflict with Israel has entered a new phase and pledged to respond after its top military commander was killed in an Israeli strike. On the other hand, global buyers are also expecting Israel to engage into a full-blown war. Hopefully, everything is in control and that does not happen. But the way things have been developing on the geopolitical front, it does not seem to be the case. Let's shift focus, talk about what gold is doing. And gold has retreated on profit-taking, but nonetheless, on the weekly basis, last week, gold has done pretty well for itself, up 1.8% for the week that went by, and as of now, also at $2,477, under that $2,500 per ounce mark, but close by, so not much to worry about. Silver has ticked up 0.5%. You have other metals also that are doing pretty well in trade. However, platinum and palladium, both of these are 1% down, but well, some safe haven behavior is being seen when we take a look at the gold prices, and as of now holding pretty well to 2,476 is where gold is winning.
Surely keeping an eye out on that. But let's move on and look at some of the important events that we're keeping an eye out on, domestic as well as on the global front. Now, when you're looking at it, India will be reporting its service PMI data. Other than that, in the global markets, US, UK, China, all of them also do have their PMI data as well as Eurozone. Japan will watch out for the minutes of the June policy meet that the BOJ had, so keep an eye out on that. Domestic front, two important earnings on the Nifty front, ONGC as well as Bharti Airtel. Plus, other than that, the non-Nifty companies, a whole host of them will be coming out with their earnings. These are the Q1 FY25 numbers. Moving on, we also have BLS International, Happiest Mind, and the HCC board that is meeting today to consider some fundraising plans. So watch out for that. Corporate actions, we'll be watching out for buyback from Sarah Sanitary Ware. Record date for Wellspun Living of shares. Today is the last day for that. Interglobe Aviation will be unveiling some business class as well as premium service plans, so keeping an eye on that one. IPO watch, let's keep an eye out on Seagull India. The IPO closes today. Unicommerce, they are opening, the anchor book will be opening today, so keep an eye out on that. Subscription data and all of that will be opening tomorrow, so keeping focus on Unicommerce as an IPO as well. So yes, all in all, keeping an eye out on these big events today and a whole host of earnings, plus the geopolitical tensions which continue to impact the markets.
Absolutely, and before we kickstart the global coverage this morning, quickly I want to draw your attention and take a look at what the cryptocurrencies are up to as of now. Bitcoin is down 9% at 54,788. You have Ether that's down 18.5%. Litecoin also not much spoken about, but well, yes, 10% down is where that one is at well. But Bitcoin, major pressure being seen on this cryptocurrency, 9% lower is where this one is as of now, just above $54,000. Let's see if it's able to hold this level or slips further, because pressure being seen on equity, pressure being seen on commodities, and well, now you have cryptocurrencies also under pressure. But with that, let's shift focus, talk about the big headline from Wall Street over the weekend, and you have Warren Buffett. He appears to be looking away from select counters, propelling cash at his Berkshire Hathaway soared to a whopping $277 billion. Buffett has sold nearly half their stake in Apple, even as the tech giant posted a record quarterly operating profit. The global ace investor is growing increasingly wary of the broader US economy and lofty valuations. Berkshire's cash stake grew to $276.9 billion as of June 30 from a then record $189 billion 3 months earlier, largely because Berkshire sold a net $75.5 billion worth of stocks.
And Chicago's Federal Reserve Bank President Austin Goolsbee said that the US central bank should move in a steady way, a mild pushback against the rush of the market bets that the Fed will react to reports of weak July jobs data with a bigger than usual half-point rate cut in the month of September. He added that the central bank's stance has been restrictive and tight even as inflation showed easing signs, and meanwhile he's declined to say when or by how much Fed should cut the rates, and reiterating that an earlier view that he does not want to tie his hands on a policy ahead of any given Fed meeting.
Let's keep it going about rate cuts and the Fed action. You have some interesting reactions coming in. Billionaire Elon Musk has said that the Federal Reserve needs to cut interest rates and that it was foolish for the US Central Bank to not have done so already. Musk's comment was made in response to a post on the social media site X following a run of weak data last week that has sparked worries that the Fed may have left interest rates elevated for too long, resulting in damage to the economy.
And back home, Adani Group Chairman Gautam Adani is reportedly planning to step down at the age of 70, shifting control to his sons in the early 2030s. According to the report, this is the first time that the billionaire has spoken on a succession plan, saying that it is very, very important for the business sustainability, adding that he had left the choice to the second generation for the transition to be organic, gradually, and very systematic.
Alright, on that note, we'll slip into a very short break on this edition of Market Cafe. More to talk about when we return, and especially we'll be telling you more about everything that's been happening in the world, so you stay tuned. Hi there, welcome back. Still watching Market Cafe on ET Now. Let's take a look at the power pack lineup that we have for you today. At 9:20 a.m., we'll be joined by Pankaj Tibrewal, the founder and CIO at Ikigai Asset Managers. He's going to be here to talk about what he's making of the markets right now, sectors he's seeing some comfort in versus valuations where he's seeing really high. Also, to talk to us about what the Q1 earnings have shaped up to be so far. Followed by that, at 9:40, we'll be joined by CK Venkatraman, the MD at Titan Limited, and he's going to be here to talk about the company's Q1 earnings. Followed by that, let's keep it going with earnings. At 9:50, we'll have the MD and CEO of MedPlus Health Services, G. Madhukar Reddy, joining us to talk about the numbers as well. At 10 a.m. then we'll be joined by Baldev Prakash, the MD and CEO at J&K Bank, to talk about the company's Q1 numbers and the growth path going ahead. At 10:10, Anuj Kumar, MD and CEO of CAMS, will be joining us to talk about the company's numbers and the outlook going ahead as well. 10:20, Govind Singh, MD and CEO of Utkarsh Small Finance Bank, will be joining us to talk about the company's Q1 performance and the growth that they're penciling in going ahead. At 10:30, then we'll shift away from earnings, talk to Pawan Goyal, the Executive Director and Chief Business Officer at Naukri.com, to talk about the hiring trends that are being seen in the market right now. And at 10:40, we'll be joined by Arun Mishra, CEO at Hindustan Zinc, to once again talk about the company's Q1 numbers and the performance that they expect to see going ahead as well. We'll be talking about the outlook and the guidance as well. So, stay tuned to ET Now today. Lots of interesting market experts as well as managements lined up for you.
Okay, let's just take a quick look again at the Asian markets, because right now what we are seeing for the Nifty implied open down more than 300 points, 1.37% decline that we are expecting for the Indian market. So yes, keeping an eye out on that. But in terms of the Asian markets, how they've opened up, Japan, we spoke about that. Intraday was down as much as 7.8%, which actually hit the circuit breaker. And overall, even Japan's Nikkei has actually fallen below the 34,000 level for the first time since Jan 10th. That is 2024. Keep an eye on that. The Wix in Japan is up almost 50%, which is the highest level that we've seen for the Japanese Wix in almost 4 years, we could say, because April 2020 was the last time it surged at such a high level. Obviously, that was during COVID. South Korea and Taiwan market also have fallen at least 10% from their recent peak levels also. And today itself, only we are seeing that these markets have seen a sharper fall. Obviously, South Korea also is seeing a bit of, they're monitoring the stock market volatility. The financial regulators are monitoring this because it's quite high. The US 2-year Treasury yield also has dropped 11 basis points, which is the lowest in almost 22 months. And what we're seeing also for The China market, that also seems to be a bit subdued because China's data point just came in terms of the consumer data point, and the stocks are something that they're watching out for. So yes, Nasdaq futures as well as Dow futures is what we're keeping an eye on, but seems like at least for the Nasdaq, the tech sell-off that one is watching out for, that could even continue, because on Friday also it was down almost 2%, and now even the Nasdaq futures indicating a sharper fall of more than 2% as well. So clear pressure coming in on the Asian markets as well as Indian markets, expected to see a bit of a decline, now down 345 points is what the Nifty implied open is indicating. On that note, let's just sip into a very short break. Don't go anywhere. We'll be back with more updates after the break. Welcome back, and you're watching Market Cafe on ET. Now, Snehi, we are just seeing 10 points reduction coming in for the Nifty implied open. So I don't even know whether the reviews that we're going to talk about for the Nifty companies will that even matter today. But nonetheless, let's talk about Britannia and Titan. Both of them reported their numbers. We do have brokerages that came out with notes on that as well. But talking about Titan, it was an inline set of numbers. We had already seen that fall coming in for Titan when the Q1 update came in, because which was a miss. So this time, jewelry segment, that was a bit subdued in trade in terms of performance because of the lesser dates that was there for wedding season. That was something that impacted, and that is impacting the studded ratio for the company as well. But yes, that's how Titan looked like. And when you're looking at it in terms of brokerages, now we do have some of the brokerages like JP Morgan maintaining their rating, target price at 3,450 rupees per share. For them also, Q1 was in line with their estimates. Competitive landscape, that is something that they're highlighting, and that has become more intense now and more tough. But everyone was keeping an eye out on the revenue growth for Q2. They're expecting, that the company would come back to a stronger growth in Q2 after, this quarter one in jewelry segment, which accounts to 80% of the business. They just saw almost just a 7-8% growth. So yes, they're expecting strong double-digit growth coming in there as well. Goldman Sachs has actually hiked the target price by 50 rupees. They're maintaining a buy, hiked the target price to 3,750 rupees per share. For them, there was a marginal beat that came in on the EBITDA margins front, so keeping an eye out on that. Macquarie maintaining the outperform rating, target price of 4,150 rupees per share. So yes, that's how we are looking at in terms of right now how one is looking at Titan. But listen into what the management had to say specifically in terms of the SSSG growth as well as the outlook in terms of the values that one is expecting in terms of growth strategy.
Same-store growth is around 3% for this quarter, and overall growth is around 9%. Aim is to, target around 40 to 50 stores in Tanishq and about 70 to 80 stores in Mia, and a substantial similar number in CaratLane. So that those plans are on. I don't know. Further beyond that, we are not sure whether it makes sense to push aggressively, because it's also a function of our current base. We are already at a fairly large base. Our presence is also very strong across most towns, 270 towns, etc. So we will stick to what we think is the right opportunity and ensure quality of stores that we open are good.
And a quick look at Britannia also in terms of numbers, inline set of numbers that came in from the company. Volume growth, a decent number that one is watching out for, exactly what the street was expecting. So when you're looking at it in terms of the volume growth, 7% volume growth in terms of that biscuit side. This time mainly it was obviously most of it was a volume growth and a pricing growth, because the company had seen pricing cuts. So yes, pricing growth was negative for Britannia this time around. Rural market, that started seeing a recovery, so keeping an eye out on that one as well. Brokerage notes, Axis Cap maintaining their reduced rating, target price is around 5,200 rupees per share. JP Morgan as well as Macquarie too maintain their rating. For JP Morgan, target price of 5,260, Macquarie 4,700 rupees. Keeping an eye out on Britannia as well, staying on the back of its numbers.
Absolutely. Let's keep it going with all the nifty earnings then. Now let's bring in Gaurav, my colleague, who's here to talk about SBI's quarter one review. And Gaurav, largely in line but slight miss coming in on the NIMs. Give us a fine print of these numbers.
Well, yes, when we talk about SBI's numbers, the numbers were actually in line. But when we talk about net interest margin, there we saw a little bit of dip, which was below what the street was expecting. In terms of advances and deposits also, that was largely in line with the street's expectation. But the concerns which were building around was mainly on the retail deposit size and retail advances, specifically on the retail unsecured loans, because we saw some kind of stress building up in retail unsecured loans, which was a little negative for SBI. Now, when we talk about the overall brokerages, we are seeing some kind of mixed set of numbers coming up from brokerages. We are getting Bernstein has maintained market perform rating with a target price of 810 rupees, because what they believe is that the normalization pain is very visible in SBI despite them maintaining their ROA above 1%. So when we go through the management commentary also, they believe that the NIMs are going to be in the same range. Credit cost will remain somewhere near 0.5%, and that is why they believe, Bernstein believes, that normalization pressure still remains for the SBI. Other than that, we have got Jefferies, who has maintained buy rating and hiked the target price to 1000 rupees per share, because what they believe is that the overall slippages were stable. And lastly, credit cost actually includes the seasonal effect. We have also got Nuvama, who has maintained the target price at 1026 rupees, and Nomura has also maintained a target price of 1030 rupees, with SBI being a top pick for Nomura. But other than that, we also got IIFL, who has maintained ad rating with a target price of 900, and who also believes that they would prefer BOB, which is Bank of Baroda, over SBI from the results perspective. So definitely one stock which is worth keeping an eye out on is SBI, because we are getting numbers which were in line, but NIMs were a little down, and a mixed bag of numbers is what we are seeing from the brokerages as well.
Right, Gaurav, thank you so much for that, keeping an eye on SBI. But we also caught up with Dinesh Kara, chairman at SBI, on their Q1 earnings. Listen to what he had to say.
We have grown almost about 15.5% as far as our loan book is concerned on a YOY basis. So that is one of the reasons why the aging provisions have also gone up. The other small aberration has actually seen in terms of the unsecured credit, particularly our express credit. In some of the states, there was a delay in repayment of payment of the salaries, and that is the reason why we had seen some kind of elevated number in terms of our unsecured loan book. Having said that, I must also mention that out of this 7,900 crore worth of provisioning which has been done, we have already recovered 7,900 crores of the slippages which we have seen. Almost about 1,600 plus crore have already been recovered between 30th June and now. So I think it is an ongoing process, but as far as there are no concerns, no reasons to be really alarmed about this number, and things are much within control, and we are hopeful to demonstrate the similar kind of a trajectory which we have demonstrated in the previous years going forward also. My ambition was to see that this bank generate a profit after tax of 1 trillion. To my mind, we are on track, and hopefully we should get to see that number soon.
All right, let's talk about Divi's Labs Q1 numbers as well, and a weak set of numbers coming in largely for this pharma company. You've got revenue that's come in at 2,118 crores versus 1,778, which is an uptick of 19% year on year. Revenue is the only metric that has actually been above what the street was expecting. On the flip side, net profit has come in at 430 crores versus 356 crores, which is up almost 21%, and this is largely in line with what the street was expecting. EBITDA has come in at 622 crores, which is an uptick of 23.4% year on year. EBITDA is also in line, but the pressure, the region, actually the metric where we were seeing some pressure is EBITDA margin, because that has only nominally risen at 29.4% versus 28.3% year on year. Not much of an improvement coming in on the EBITDA margin front, and that has actually what has missed the street expectation. Margins have come below compared to what the street was penciling in. Let's talk about their FY25 guidance as well, what the management has said. They've maintained a double-digit top-line guidance. They expect the API prices to stabilize in the near term as well. They're also expecting double-digit growth in the API volume, and nutraceuticals business, they believe, is on the path to achieve double-digit growth. So this is what the management has said. Now, this is their aim for the revenue split as well. 50% revenue coming in from custom synthesis and the remaining 50% coming from generics. They're also saying that they maintain a capex target of anywhere between 2,500 to 3,000 million rupees. So This is the guidance coming in from Divi's lab as well. They plan to improve the asset turnover by 1 time compared to that 0.7 times where it is at right now. And they're also preparing their peptide fragment synthesis for the GLP-1 products. All of this is in the pipeline when it comes to Divi's labs. But well, yes, report card looking largely mixed when it comes for this company.
Okay. Surely we will keep an eye out on Divi's lab in trade as well, an important one to watch out for. But moving on, and the SEBI member Anant Narayan says that the trading in index options close to expiry sometimes resembles a slot machine in a casino with individuals hoping to hit the jackpot. Brings back the spotlight on SEBI concerns around FNO's impact on markets. But we also managed to speak to Feroz Aziz of Anand Rathi Wealth on the same as well, and how the FNO market has started impacting overall the equity markets. Listen into what he had to say.
If the restrictions are irrational, if there are restrictions are incremental in nature, not disruptive in nature, then it is actually a very good thing to do. Nike, if today you are speaking of STT increase, it's not so dramatic that it will cut out most people. So I personally think it all depends on the regulation. It depends on the extent of regulation. If it's incremental, it's very good. If it is disruptive, then it may not be good. If there was a situation where you are completely restricting a certain group of people, then there is a problem. Today, what are we saying? Today, even if the options contract value goes up, a person can buy an option at 30,000 rupees, add the money on Nifty, which is the largest index. Now, 30,000 is not such a large amount. You don't want a 5,000 rupee guy to gamble. You want it to be 20,000. At the money options, 20 to 30,000 rupees is what the buyer premium needed in the bank account. So I think since these are incremental changes, I look at them very, very progressively.
All right, on that note, we'll slip into a very short break on this edition of Market Cafe. But just take a look at what the implied open is indicating. A further fall coming in on that front, 360 points lower, almost 1.5% lower is where we're expected to open today. But on that note, we'll go into a break. We'll be right back. Hi there, welcome back. Still watching Market Cafe on ET now. Let's take it across to my colleague Ansh, who's joining us now with the FNO snapshot of the day, what to expect on the derivative front. And Ansh, take it away. Talk to us about the levels to watch out for.
Right. So let's start with what FIs did in the previous session. We see that they have cut the long position by around 1,400 contracts. They've also added huge shorts by around 19,000 contracts. So net to net, we are seeing addition of around 21,000 contracts on downside, due to which the total long has dropped to 63.8%, which is a negative sign. This shows the strong bearish stance in the market. Now, if you talk about Nifty, then in the previous session, Nifty has actually given a breakdown from its 4-session consolidation pattern. This is also one of the negative things which we are seeing in the market today. Also on option front, we are seeing call writing happening at 24,800, indicating strong resistance around this level. Whereas on downside, we are seeing put buying happening at 24,700, indicating option traders are expecting Nifty to go below this level. Now, if we talk about Nifty Bank, then that has been consolidating from last 5 sessions, indicating a bit of a neutral stance in the market. But in index future, we are seeing open interest going up by around 6%, indicating short build-up, which is a bearish sign. Also on option front, we are seeing put buying happening at 51,200 strike, indicating option traders expecting Nifty Bank to go below this level to around 51,000 psychological mark. Lastly, let's have a quick view on few of stocks that are in focus, and we are seeing long build-up happening in Divi's Lab, Naukri and IEX, where short build-up for Cummins India, Tata Motors and UPL. Lastly, if we see a ban list, then we have Aditya Birla Capital, Birla Soft, Chambal Fertilizer, GNFC, Granules, India Cement, India Mart and RBL Bank. Also, with global market being in red, Indian market is expected to follow the same color. So keep an eye on the stocks.
Surely keeping an eye out on all the stocks in the world of FNO. But Ansh, also what are the stocks that we are keeping an eye out on the back of news flows or on the back of earnings?
Yeah, let's start with earning stocks, and we saw the JK Tyres have reported revenue of around 3,639 crore, which is down by around 2%, whereas if we talk about their net profit, that has gone up by 37% from 154 crore to 211 crore. Also, if we talk about Amar Raja, then they have reported their revenue at 3,263 crore, which is up by around 16-17%, which is a positive sign. Also, their net profit has jumped by over 25%. If we talk about EBITDA, that has given a good uptick of around 7.6%. Also, the EBITDA margin has actually reduced from 17.9% to 16.6%. FLR also reported the numbers, and their revenue is around 520 crore, which is up by slightly 2.6%. EBIT is up by 9.6%. PAT is down by around 1%. So here we are seeing a neutral stance coming in for the stock. MedPlus has reported the revenue of 1,489 crore, which is up by 16%. Also, their PAT is up from 3.8 crore directly to 14.3 crore. This is a very strong jump seeing in PAT. Also, if we talk about other stock, then we have earning of LIC Housing Finance also, and they have reported profit of around 1,306 crore, which is down by around 1%, whereas their revenue, it is being reported at 6,767 crore, which is up slightly from that 6,759 crore. So keep an eye on the stocks.
Thanks so much for taking us through all of those stocks to watch out for today. Let's focus but talk about all the stocks to watch out for on the back of what brokerages are saying this morning. First up, let's talk about delivery, and Investec has come out with a note. They maintain a buy, hiked the target price to 570 from 565 earlier, 5 rupee target hike coming in. They believe that the strong performance is what the company showed in a seasonally weak quarter, and the express parcel volume recovery is a key monitorable to watch out for. Now, they're saying that the positives for this company are robust part truck load growth, the yield increase is looking good, and the controlled growth in overheads is also something that Investec likes for delivery. Moving on, let's talk about UPL, and Jefferies has come out with a note on UPL. They've maintained a buy rating, hiked the target price to 665 rupees from 610 earlier. The company expects prices to stabilize now. The medium-term drivers for margin expansion also look good, and it's a buy on favorable risk demand for Jefferies, and that is UPL for you. Let's keep it going with UPL because Citi has also come out with a note on this. They maintain a buy rating, but on the flip side, they've cut the target price to 640 rupees from 675 earlier. They're saying that the Q1 was below on higher fixed costs, and sequential uptick in contribution margins is something that they also noted. Global destocking in crop protection is nearing completion. That is what Citi is pointing out for UPL. Moving on, let's also talk about some other stocks. You have Jefferies on LIC and JP Morgan and Amara Raja as well. Maintained a buy for LIC Housing and maintained a neutral for for Amara Raja as JP Morgan.
Okay, surely keeping an eye out on those individual stocks, but we have Morgan Stanley as well as BofA, which have come out with a note on the India Strategy Fund. Now, when you're looking at Morgan Stanley, what they're saying is they believe that the market is still does not appear to have excess that defined the bull market peaks, while BofA is saying that the market is near peak valuations, slowing growth and rising risk is something that they're watching out for. BofA highlights that they see a confluence of risks which are likely to drag the markets. They said that the Nifty may correct in the near term, suggesting around a 7% downside if the valuations converge to the long-term averages. So yes, the preference comes in from large cap over small and mid cap side is what they're looking at. They've raised their targets and weights on defensives, that is staples, healthcare as well as telecommunications, and they've cut their weight on metals, real estate, autos, auto industrials, PSUs as well as cement and financials, where they're underweight on, cut their weights actually, not underweight, and specifically they're underweight on IT, power, utilities and energy and discretionary, where they don't see much of an excitement coming in. Morgan Stanley also says that they said that the bull market correction is due any time, so yes, keeping an eye out on that. They prefer cyclicals, then comes the defensives, and they prefer large caps over mid caps is the word for from Morgan Stanley as well. So clear preference from BofA as well as Morgan Stanley, both do prefer the large cap side. But for Morgan Stanley, they prefer cyclicals over defensives, while BofA is preferring defensives. Morgan Stanley is overweight on financials, tech, consumer discretionary, industrials, while they are underweight on the other sectors. So interesting notes coming in from Morgan Stanley, I beg your pardon, as well as BofA on the India strategy.
All right, let's move on then. Talk about the Jeffries note coming in on greed and fear. You have Chris Wood's note coming in this morning. He's saying that India is more resilient to US downturn compared to Japan. So that's one point to note out for. They're also saying that the DIIs are driving Indian markets unlike Japan. So this is what they're also noticing as well. 26% of greed and fear global long only portfolio is in India. It's mounting pressure to sell private equity in India is something that they're seeing build up, and they're also seeing some healthy global demand for Indian equities. So greed and fear note this morning coming in from Jeffries. Jeffries is Chris Wood, and comparing India and Japan. But well, yes, some good points being made on in India's favor actually.
Okay, let's move on and talk about some of the important updates coming in and top headlines from the global as well as domestic front. At least 91 people were killed yesterday due to a violent clash in a student protest against the quota reforms in Bangladesh. Meanwhile, India has advised its citizens not to travel to Bangladesh until further notice, with renewed student protests demanding PM Sheikh Hasina's resignation. And the protest began last month when Bangladesh High Court ruled in favor of reinstating a 30% quota in government jobs for descendants of the freedom fighters. And moving on to some more update, violent scenes were witnessed in UK as far right extremists stormed a hotel in Rotherham believed to be a housing asylum seeker and set it on fire. And now the incident marks the latest escalation in the country's most severe unrest in over a decade. The anti-immigration sentiment triggered by misinformation about a mass stabbing incident in which 3 young girls were killed in Southport earlier has snowballed into a massive violence across the UK in the past few days. And moving on to some update in the world of sports, and Novak Djokovic finally ended his long wait for the first ever Olympic gold by beating the world number 3 Carlos Alcaraz in the men's single final yesterday. The tennis legend defeated the young Spanish star in one of the most thrilling finals in Olympics history to win a gold after 16 years. With his first Olympic gold, he made the list of players to make the career Golden Slam in singles history.
Some legendary stuff coming in on the Olympics front from Djokovic, but let's shift focus back home. The Parliament's budget session resumes today with several key bills on the agenda. The central government is all set to bring changes to the Waqf Act, thereby redefining the powers of the Waqf Board. On Friday, the Union Cabinet approved around 40 amendments to that act. And on the weather front then, IMD has issued a yellow alert for Mumbai. The city is already experiencing strong winds and heavy rains, while Himachal Pradesh reels under flash floods and landslides. 87 roads are also shut. IMD has sounded a yellow alert till 8th August for that area, and 17,000 people are evacuated in the neighbouring Uttarakhand as well. Electricity, telecommunications remain impacted.
And with that, we're absolutely out of time on this edition of Market Cafe, leaving the Nifty implied open down 360 points in trade today. But with that, it's a goodbye from Snehi, myself, as well as the team who put the show together.